Gabriela, what's your take on the recent sort of sideways move we've seen in equities, and is that setting us up for a chance to run higher?
Well, Wilfred, I think really since early April, we've been looking for a next catalyst, a next narrative for the market. We had a nice recovery phase there from November to March. We know we're going to get a huge surge in growth in the middle of the year. And now the attention has really shifted into the expansion. Is growth going to moderate? Is inflation really going to come to fruition? And we just haven't had new information on that front. We will get a lot more in June with payrolls next week, followed by CPI the week after, followed by the Fed. But for now, it's a bit of a consolidation phase, much more normal once you get to this more mid-cycle phase.
Well, it feels like the verdict is still out on inflation. And that's, Gabriela, part of the question and part of the evaluation here on stocks and valuations. Where do you stand?
I think so. And I don't think we're going to settle the inflation debate over the next few months. It's going to take us time. For us, ultimately, where we really come to the conclusion is that inflation as a base case should moderate back to 2% as the year goes on, but that there's more two-sided risk now. And as investors, we should already be positioned for some of that upside risk to inflation, which is new this cycle. We did not have this last cycle. And I think that really argues for parts of the value style, like financials, like materials, in cyclical regions like Europe, like Australia. Very much out of favor last cycle, coming into favor this cycle as a possible inflation hedge.
Shepard Smith here. Thanks for watching CNBC on YouTube.